YieldMax Group A will be going X this week. So let's take a look at a few different ones and see what they're doing. Hello my friends, this is Legend. Group A will be going X this week, and I wanted to take a moment to kind of go through a few of these, and we'll look at Tesla, Crash, Feet, and FIVY. So let's go ahead and slide over to the chart and check them out. All right, so here we are on Tesla. And as you can see, Tesla has been falling, I guess probably since the mid of December 2024. And it's been going down from that $18.22 down as low as $7.47. And it has since come up just a little bit. It's sitting at $8.24. It did pay out a distribution in February of about 57 cents. It has been falling, but so has Tesla. So let's take a look at Tesla, and as you can see here, Tesla itself has been going down as well. The way the YieldMax and the High Yield ETFs work is they take 100% of the downside, but is limited on the upside because they're selling calls against it. So that does limit their upside. But the downside, they do take the full downside of the underlining. So here on Tesla, I don't know, maybe it might be trying to find a little bit of a support right here, but it's just kind of been going down and down. And for now, for me, Tesla would just be a hold, and that would be my thoughts on that. And of course, since Tesla's been falling, Crash, CRSH, which is the short against Tesla, it's actually been going up, which does make sense, right? So if Tesla is going down, Crash is going up. And looks like Crash had been at $5.67 at a low, and it hit a high of about $8.40. So if you got in around that low part, which was around about that same time that the market started falling here, as you can see right here, 8/20, that date right there, that's when the market started dropping. Crash was going up. So if you got in around this time here, you're probably sitting pretty nice with Crash. They did pay a distribution in February of 38 cents. Here we got Feet. Feet itself here has been, since it came out, just been kind of trading sideways, right? Been some ups and downs, but overall just trading sideways, which is not a bad thing for the YieldMax ETFs. I don't mind them trading sideways and then still paying out the distributions. That's a good deal in my books. I prefer them to go up, of course, but if they trade sideways and still pay out a distribution, I'll take that every day. But as you can see here, on that distribution date was also that same day, 2/20, and that's when the market started dropping, and so did Feet. Now, the fact that Feet was trading sideways up until the part where the market started dropping kind of gives you the thought that this is not stock driven or the underlining driven. This is the market itself, right? The market itself has been going down, so it's just pulling down everything else as well. And like I said, the fact that it was trading sideways up until that point, this drop here is just market. It is not necessarily the ETF, but it doesn't mean that the ETF isn't going down as well. But just to give you an idea of the SPY here, before we slide over to FIVY, as you can see here, there is that 220 right there, and that is the point where the market started dropping. And you can see here's the low of 549.68, and we had the high of 613.24, and at that point is when it started dropping. Now, in order to hit a correction, you have to drop 10% at the market. Let's just see if that signaled a correction in the market. So here we have the calculator, and we can easily find out if that's a 10% drop by simply doing 613.23 minus the 549.68. That gives us $63.55 drop in the price. Take that divided by the 613.23 and then take that times 100 to get a percent. So yes, it did drop that 10%. It dropped 10.3% in the price. So that does signal a correction. So the market did hit a correction on 313. Now it looks like as soon as it hit that correction, it actually started going up. So did we hit that correction and now it's starting to run back up? That is very possible. Or are we seeing like what they call a dead cat bounce, where it shoots up before it falls right back down and keeps on going? It also could be called a bull trap, to where you see it moving up and you think we're back into a bull run and then it falls back down. But I'm going to go with the positive side, and I'm going to say we've hit that 10% correction, and now we're going to start seeing a little bit more of an upside to it. I don't know how far it'll go up, but that's my thoughts on the market. So let's look at FIVY, and FIVY looks a lot like feet. As you can see, it was trading pretty much sideways right up until February the 20th, and then it fell. So as you can see, that seems to be pretty much the common factor between all of these stocks, is that once the market started falling, it just pulled everything else down with it. Now, LFGY is a weekly pair, but I wanted to pull that one up as well. So here we're looking at LFGY. So as you can see here, it's pretty common. Again, hit that February the 20th, and we've started seeing a fall. Now it has started trying to turn and come back up. The MACD right here looks like we're starting to get a cross up. We got a little bit of green volume right there, so it is trying to cross up. We'll see if it continues, but we may have hit the bottom there. And again, it is following the SPY, the S&P 500 here. Everything seems to be following this. They fell down around that 313, and now we're starting to come back up. The question is, do we continue the move up? I hope so, and that's what I'm shooting for. And of course, we can't leave without checking out MSTY. Let's look at MSTY. So here we are on MSTY. And MSTY, of course, we are just riding that support line. We're holding pretty strong with it. We did get a couple little green candles. It did go down just slightly today. It's down 13 cents, down to $20.73. And it did pay out $1.30, roughly 38 cents in distributions. And that paid out on Friday. So it looks like if you look at this candle right here, and we kind of zoom in for the people in the back there, as you can see, we hit that support right there and paid the distribution. So if you bought it on the X date, you probably made a pretty good choice there, as you would have purchased it at around $18 and say $50 to $18.89, somewhere around there, and then you would be sitting at a $20.73 current price right now on just those shares. So good move if that's what you did. What do you think? Did we hit that 10% correction and now we're going to start moving up? Or do you think we are seeing more of a dead cat bounce and we're going to see that SPY moving on back down? Like I said, I'm going with the positive side, and I want to see this thing continue on back up, because that's just going to help push all of our other ETF stocks there. So I think I'm going to wrap it up right there. Don't forget to like and share this video. It is much appreciated. And also, please subscribe. It does help the channel out, and I need those subscriptions in order to get the videos pushed out to new people. So as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.